Let's take a look at the broader macroeconomic picture as it stands. Finance Minister Kayode Akindele's economic blueprint is meant to be released this week. Now, she's been given broader powers apart from just running the finance ministry to have an overarching role in terms of overseeing government economic policies. Is there any indication of what are the key focus areas of this blueprint?
Well, she has mentioned during her Senate hearing, confirmation hearing, and also during her swearing-in last week that her main focus will be on stimulating job creation in the economy and ensuring that the government puts things in place that ensures mass job creation to kind of kickstart the economy. Secondly, she wants to bring back fiscal prudence to the government, especially looking at recurrent expenditure as a percentage of the budget and trying to bring that down. And in that sense, and that will require wide-scale reforms, especially in the civil service and other areas of budgeting in the government.
Now, this is all great on paper, but there are a lot of challenges that she's faced, many saying the implementation of removing the petro subsidies and deregulation of that sector, also implementing the minimum wage, and as a result, creating a more efficient and productive workforce in light of the fact that they are going to be paid higher salaries. What do you see as the greatest challenges for the finance minister?
There's a lot of hard reforms that need to be in place. As you said, the new minimum wage obviously is going to increase the government's recurrent expenditure in that sense. But if they can rationalize some of the civil service operations in a sense where, for example, last year the former finance minister said that 16 ministries and MDAs were looked into, and they saved over 12 billion naira from the removal of ghost workers from the payroll. Now, if that's expanded to all across the civil service, that could create some savings. Also, in the sense that the minimum wage has led to problems not just on the federal level, but also on the state level, because states having their own state civil service have to implement the minimum wage, which many states claim they're unable to afford.
Now, Oando closed the week, just taking the conversation back to the market. Oando closing the week with a 4% markup, 13 naira 20 kobo. It closed out on Friday. Now, that stock generally been though on a downward trajectory. This after it announced plans that it's looking to move its upstream assets into a company called Exile Resources that listed on the Toronto Stock Exchange. Has management given any education of the rationale behind this move?
There have been rumors in the market for the past 12 to 18 months that Oando is looking for a listing in a Western exchange, either London or elsewhere. Now, the London exchange seems to have gone back to the back burner, and this seems the way of moving their assets and listing their assets on the Toronto exchange. Now, the question is, from the press release from the management of the company, from Oando, they state that it's just their upstream assets, which is seen as the jewel in their crown, really. Downstream petroleum is seen as a very low margin business, especially when the petroleum subsidies are removed, will be less profitable for most people. So the moving the upstream assets into the listed in Toronto Exchange makes sense, because a lot of funding will be required by Oando to build on their upstream assets as they see fit. Now, in terms of shareholders who hold the Oando shares, what that means in terms of their actual holdings for what is actually listed in Nigeria and Joburg remains to be seen.
As you say, moving the jewel of their assets out of the company, and of course that could affect the value of current shareholders' investments. What do you see? How do you see the stock being impacted by this uncertainty over how this is going to roll out?
Well, I think the stock is not going to perform that well until the management comes out with a clear and unequivocal statement about what exactly will mean by moving the upstream assets into this listing, if it does get the go-ahead from the Toronto Exchange authorities, and what that means for the rest of the Oando group. Is
the TSX the right place for a company like Oando to be growing its brand and raising capital?
The Canadian exchanges are normally for mining companies, and a lot of mining companies focused in Africa are listed on the exchange in that sense. In terms of upstream oil, there are not that many, and so it's a curious move in that sense.
We've had a lot of discussions recently around oil marketers and oil companies getting exposure to them. Do you have exposure to the sector?
No. In terms of the downstream market, until the uncertainty over petroleum subsidies are removed, and even if they are removed, it's a low margin sector, high volume, low margin, and don't see much growth in that sector. In terms of midstream and upstream, that's where growth is seen, but not very many, apart from Oando, which was listed in London and Nigeria and Joburg and Conoil, there's not much chance to get exposure to the upstream sector.
Now, the Central Bank of Nigeria has awarded 11 operating licenses to mobile firms who have partnerships with some of the top banks in Nigeria. For example, GTB forming a JV with MTN there in terms of offering mobile banking services. Can you give us a little more detail around this move?
Well, after the first banking consolidation in 2005, when there was a big move to try and reach the unbanked, which the CBN at that time estimated was about 40 to 50% of the population. The first initial move was to do through massive branch expansion and try to reach much of the public through that way. Now, what's happened is that, in a sense, because of the lack of infrastructure in Nigeria, the branch expansion has been proved to be very costly. And if you look at most banks and break down what their branches do, only probably about 10% of their branches are actually profitable. So I think most of the financial institutions have taken a step back and looked at other ways of trying to reach that sector, especially in the rural areas. And mobile banking, which has proven quite successful in places like Kenya, is seen as a way to do that. And especially with the recent drive for biometric registration of SIM cards, that has made this possible.
What type of penetration does mobile banking have currently in Nigeria?
Well, according to NCC, there are over 70 million active subscribers in Nigeria, mobile phone banking subscribers in Nigeria. That's more than the total number of current accounts in Nigeria. So you can argue that more people have mobile phones than do have bank accounts at the moment. So you'll be able to reach a bigger spectrum of the population through mobile banking than through the traditional banking methods.
Now, just looking at the list of banks here, it's UBA, GT Bank, Eco Bank. Could we see any positive trade around these stocks as a result of these licenses being awarded to them?
I think in the medium to long term, depending on how they operate, I think GTB's tie-up with MTN is very interesting because MTN is definitely the market leader in Nigeria. They have the most subscribers and they have most of the high-end value subscribers in that sense. So how many of them would use mobile banking is up to question. But that tie-in will probably look well on the GTB stock price. In terms of the other institutions, it depends on their implementation of this mobile banking because in a sense, a lot of the banks have not, especially with the lack of infrastructure in terms of broadband access and various other issues in terms of bandwidth available. It depends on whether they are able to implement this properly.
Now, the month of August has been a tumultuous month for the Nigerian market. It's down 5.5%. Are there any stocks that are looking particularly cheap at this stage for value investors?
I think across the entire stock exchange, if you look at the stock, especially in the food and beverages sector, and even some of the financial stock, if you take a medium to long-term view, they are looking quite cheap at the moment. I think the main thing in the market is that everyone is still waiting for something to drive the market forward. Now, the banking stocks are over 70% of the market. Now, to this September 30th deadline, the TIA issues are fully concluded. To satisfy conclusion, in the banking sector is not really going to take off, and that to drag the sector forward. The only other sector is Dangote Cement, which is about 30% of the market, and that hasn't really been able to drive the market forward either. So I think, in a sense, if you look across the market, most of the stocks people will argue, are undervalued, apart from maybe some bank stocks like GTB, which has performed well even down through the downturn. That might be a bit pricey at the moment, but I think until we conclude this TIA issue and see whether all the banks complete their TIA that they've signed to a logical conclusion or some are taken over, I don't think we're going to see much of a big fill-up in the market.